On today's Rice Report, I am joined by 30-plus year veteran trader Nick Santiago. He is a co-founder of the PPT Methodology and InTheMoneyStocks.com, along with Gareth Soloway. And today we're going to be getting his outlook on 2023. Before we get into it, make sure you visit ricetvx.com and sign up for my mailing list so you never miss an update or new Rice TVX and Rice Against the Grain content. You will also find links to all of my various channels as well as my social media. Make sure you're following both of my YouTube channels, Rice TVX as well as Rice Against the Grain. And due to censorship, make sure you follow me on other alternative platforms such as Rumble and Odyssey, where I do post up exclusive content. If you want to support Rice TVX, be sure to check out and join my Patreon channel, where you will get early access to my videos with no ads, unedited. You will also get exclusive content and more. I will include links in the video description for everything I just mentioned, as well as everything shared on today's video. Greetings. Joining me on today's show is a first-time guest. I am joined by Nick Santiago. He is a partner with Gareth Soloway at InTheMoneyStocks.com. He has been trading since 1991, world-renowned technical analysis, expert in Elliot Wave, Gann Theory, if I'm saying that correctly, Dow Theory, and Cycle Theory, and he's the co-founder of the PPT Methodology. Welcome to Rice TVX. Nick, how are you doing, my friend?
It's great to be here. Thank you very much. I'm doing wonderful.
Well, I'm definitely looking forward to the conversation. I'm very familiar with Gareth. He's been on the show quite often. He'll be back on early February for people that are wondering when he's going to be returning back to the channel. But today we get to have a different sort of conversation because Nick is very much focused in a different area in a way that Gareth isn't. And we'll get into that. So if you don't mind, Nick, could you introduce yourself to everybody who may be unfamiliar with who you are?
Sure. I'm Nick Santiago. I'm the president and co-founder of InTheMoneyStocks. We formed the company back in 2007. As you know, at that point in time, we were just on the cusp of a market collapse, and we went into the Great Recession. So how many people do you know would start a company, right when the stock market is about to collapse and call it InTheMoneyStocks? And we made our bones really in that collapse. That was where we really got on the map and got featured, in so many different places. But prior to that, I was a stockbroker, and I couldn't stand that business because I just felt like a used salesman, and I was being forced to push product, and I absolutely hated it. I thought I was going to go into the stockbroking world and find out the secrets of the universe to make money, and I found out how to read a script. So I left that business and I got into the trading business. And how I got into that was I just really had to find out what made stocks move. And I started to study, Elliot Wave. I started to study traders like the legendary W.D. Gann, Jesse Livermore, all of these legendary so-called traders. And I learned a lot from them, and especially W.D. Gann. That's the one style I gravitate the most. And I put myself on the map basically by predicting the stock market top in 2007, virtually to the day. And it was a pretty incredible feat using cycles. And I couldn't believe when I put it all together, I finally, had arrived. I thought wow, all of this work that I've done over the years trying to learn this stuff really starting to pay off. And again, we've been around 16 years now. So, it's been quite a journey, and I'm very blessed to be here.
I appreciate you taking the time to explain that. I'm curious, how did you and Gareth actually connect?
Well, I was a stockbroker, and I had left that business. Gareth was a stockbroker, and we ended up meeting in a day trading office, and that's where we were both day trading. And, the day trading world is very, very small. There's not a lot of people that actually can do it. And he and I were working there together, and we used to chat all the time. We used to go out to lunch just about every trading day. And I had been sitting in there, and somebody came up to me and they said to me, hey, do you think you could show me what you do? I can't really grasp this business. And I said, sure. I'll do it. And the guy goes, I'll pay you a significant sum of money. And I was like, okay. At that time in my life, I was, transitioning from a stockbroker to just trading by myself on my own. I said, I'll take that income. And I showed him how to do it. Next thing you know, he introduced me to somebody else. And it started to develop into a business. And I went to Gareth. I said, I think this business is going to blow up. I said, do you want to come in with me and be a partner and, start this company? And, who would actually start a company right in the beginning of 2007 where the volatility went from, nothing, and the housing market is starting to collapse and everything like that. And, we helped out a lot of traders. We told them what was going to happen. And we navigated through that year, really successfully through 2007, 2008. And then, actually caught the 2009 bottom, and the rest is history. We've been picking tops and bottoms ever since.
I don't think it's a crazy time to enter into the markets in 2007 if you know what you're doing and you know how to capitalize on where the market has got, I don't know, overinflated. A good thing for people to watch, to give a great example of what occurred in that time period, is a movie, The Big Short. And really, like, another individual that it made me kind of think of is Richard Kiyosaki, because it's when you have these devastating economic events that the people who have that capital on the sidelines can really truly take advantage of fire sale prices, so to say, when there's actually blood on the street, real blood, which may even be your own blood, as the Wall Street likes to say.
That's right. And there were opportunities not only in, shorting equities or shorting housing, but commodities were running too. You had like oil going to $145 a barrel, its all-time high. And, again, that was another area where we were able to help our members. I remember when that happened, I shorted oil and I said, you want to short it because Goldman Sachs just gave it an upgrade at an all-time high. It's at 145 and they upgraded it to 200. I said, this is, a perfect institutional game that they play. Short this thing. And, who would have thought it went to 60? It went down to $30 actually, but it took a free fall to 60. And, there was some just amazing calls there in the market. And, that kind of put us on the map. And, we've been, growing really ever since.
You were when you were mentioning prices, you were talking about oil?
Yeah, I was talking about oil right there back in July of 2008.
Which in 2020 at some point around the summertime, it was trading at a negative.
Yeah, it went negative 40. That's the first time I've ever seen that. Honestly, it was actually baffling because I said, who wouldn't want to own this at this point in time?
Right.
The only way you could buy it is if you could store it. So, it was pretty wild stuff. I've never seen that before. And it just goes to show you what kind of world we're in right now, where it's just upside down. This is not the norm. I've been in this business, from the 90s. So I've seen a lot here, and I'll tell you, we haven't seen anything yet because this world is so upside down right now between you and I and the listeners here. This is crazy stuff.
I think most of the listeners are definitely well aware. We are in bizarro world, 100% upside down. Can you explain what the PPT methodology is from your perspective?
Sure. So PPT, a lot of people think it stands for Plunge Protection Team, but it doesn't. That's, the president's working group after Ronald Reagan gave an executive order after the 87 crash. But what it stands for is price pattern and time. I wish it was called PPTV because price pattern and time are real-time indicators, but volume is just as important. And a lot of people should add that in there. So basically what we learned, and basically as all traders, a lot of traders know that a lot of this stuff. But what happens is when you can put it all together and you can incorporate price pattern and time together, you actually create a very, very great, very, very good risk reward win scenario. So the odds increase in your favor as opposed to being, say, somebody in a Las Vegas casino sitting at the other side of the blackjack table from the dealer. That person's a gambler. They may be having a cocktail. But the reality of it is they sit at that table long enough, the odds are that they're going to lose. So we have it where the odds are we get into a trade, we stacked enough factors on our side where we're going to have a winning scenario, most likely, probably about 80% of the time. And that's where we came up with that term, PPT. It was kind of catchy. And it's kind of stood the test of time, and it's been around for a while now.
Awesome, man. I appreciate you explaining that. And your Twitter account says that you're a world-renowned technical and you do world-renowned technical analysis. Gareth claims to be the master of technical analysis. Where do you compare it with your technical analysis skills with your partner?
Well, I've taught him a lot. So, you know what? He's done really, really well, especially, you know, in the crypto world, which I don't dabble in. But, you know, I've made a lot of good calls. I'm humble enough to know I can be wrong. This is a humbling business. So I never go out on a limb and say I'm the greatest of anything. All I could say is I'll let my calls speak for themselves. And anybody that knows me for a long time knows all the calls I made, including this latest one, saying that the S&P would top out in January, the NASDAQ would top out after options expiration in November of 2021. So, you know, that's all documented stuff. My trading record is there. Everybody, you know, comes to see, you know, everything you do, everything you say, you know, but I'm not one to, you know, I don't love touting my own, you know, my own
I
stuff.
just had to say something since you both mentioned it and your partners. I didn't know if there was like some sort of brotherly rivalry going on.
Yeah,
with
there's
technical
nothing like
analysis
that.
skills.
And in fact, Gareth puts out 1 million trades, man. He's just an animal. For me, I can't do it like that. I'm very, very mathematical specific. I do everything based off of mathematical calculations. So for me, it's all about, you know, just getting in at the right time. I'll never be in nearly as many trades as Gareth, but, you know, I don't know if there's anybody in the business that's called more tops and bottoms than me. You know, but hopefully I could keep doing it.
Awesome. Well, I mean, I really do look forward to more conversations with you. And this is definitely serving as an introduction. I know we don't see eye to eye on everything, which is cool. And I enjoy conversations like that. And we'll get into that part. But there are definitely perspectives on the market that I would really appreciate you sharing here in just a little bit. So we have InTheMoneyStocks.com that you do with Gareth Soloway. And if people are familiar with Gareth when he comes on the show, we also promote verified investing crypto. And as I was asking you before we started recording, are you involved with verified investing crypto?
No, I'm not. That's Garrett's project. He really embraced the crypto trading world. For me, I really just couldn't grasp it enough. I really stayed away from it. Not that there's not money to be made and not that you can't chart it. I chart it for members all the time. But honestly, I'm just not a believer in it. You know, it's because, and it's not because it's crypto itself. It's because I can't find out who started crypto. I don't know who created the blockchain. And, you know, I'm born in Brooklyn, New York. Every other corner where I lived had 3-card Monte going on. And that's what this seems like to me, 3-card Monte. And I'm not saying people haven't made a lot of money in it. Gareth has done exceptionally well in it. People can get very wealthy from it if you know what you're doing. I actually can chart it as good as any chart I've ever charted. And I just still don't touch it because, like I said, I just don't get involved in things that I just don't trust. And I really haven't embraced the crypto world. Like I said, I just can't buy that some guy from Japan started this up. And, you know, blockchain came from out of the ceiling. You know, I just don't know where it began, and I've left it alone. And I've told my members that. I said, hey, it just doesn't pass the smell test for me. So I've just stayed away from it.
I respect that. And, you know, I mean, if you're ever interested, I can kind of give you a little bit of a backstory on the cypherpunks and the development of digital cash, where it developed from and how we got to Bitcoin. I get the not knowing who the creator is, but there's plenty of other projects out there that have public known creators. So I didn't know if like you've considered those kind of things. Also, I would, and I guess I want to get your thoughts on this. I'm not a big fan of the Federal Reserve. Are you?
No, I'm not.
And I don't like what they've done to the US dollar. And I look at something, and for me personally, I look at something like Bitcoin as a decentralized cryptocurrency specifically as being an alternative. But that's another conversation that we can have.
Let's touch on that if we could for a second.
Yeah.
So that's my point. Crypto, I remember we could have gotten back involved in this in like 2008. And I said, it just doesn't seem right. I was like, something's not right there. Well, when you think about it, this is supposed to be the anti-dollar play, right? Decentralized from, a central bank. And look what's going on now. I mean, you have all these guys begging for regulation. I'm not a regulation kind of guy. I like deregulation. I think the market should work things out. I'm a free market capitalist. Yeah. Let the market work it out. But yet now you got, everybody calling for Bitcoin to be regulated. You got everybody, concerned. You got the FTX and all these collapses.
The traditional system is calling for the regulation. Not many people in crypto itself where I think most people would agree with your stance that it's the free market should decide and
But think about this. I'll just bring this point up, and I've said this before. I think the federal government has taken people to court for printing their own coins. I think one time they almost brought Chuck E. Cheese to court because they were putting coins in their video games. And people think they're going to let crypto stand. Now you got the central bank digital currency, CBDC, going into the 12-week pilot program. They're probably in week 10 already. This is all looks like to me like the central banks have been promoting crypto to get everybody's head wrapped around it before they bring their own digital currency into play. And I think that's where it's really headed.
I just listening to this, and I don't know if you guys will be up for it, but I would love to get you and Gareth on for like a little debate, a nice civil debate to kind of, because I think people can learn a lot from discussions like that, because I do appreciate your perspectives 100%. But I look at the CBDC as being the centralized, mutable, programmable, anti-version of what Bitcoin was created as. And the source code is all open. So if you were a coder, you could go in and verify everything. But I get your hesitancy. I do. Well, and I appreciate the way that you look at things.
Yeah, just so that's my skepticism. And I thought about this years ago. This isn't something that I'm thinking about now. I've been saying, there's going to be a central bank digital currency years ago, because I said this is prepping everybody to do it. And then you didn't have just Bitcoin, which is kind of the original, but then you had Ethereum and all the others that came along. And the other thing, as a trader, and Gareth will say this too, you could see the collapse coming because there was so much easy money out there pumped into the system by the central bank, and now that money is being retreated. So, even if you don't want to look at a chart of Bitcoin, you can look at a chart of Robinhood, or you could look at a chart of Coinbase, how that was rushed out to the public. And by the way, Coinbase traded in dollars, right? You needed dollars to buy Coinbase, you still do. And here it is, traded in the public arena. And you could see how that thing was parabolic, and now it's in the toilet bowl. So it's just all the same. It's just more easy money. And then, money went into NFTs. It even went into invisible art. I mean,
I'm not a proponent of that.
So when you start to see stuff like that, that's what we call, veteran traders like me call that froth. And we say, hey, there's massive froth in this industry. And, NFTs, I have a hard time with that too. I can't even grasp my head around that. And I say, wow, look at all this massive froth. And then I look at all the people. I know so many people. I can't walk through my grocery store without somebody telling me how much they lost in Bitcoin. And I say, well, you got to sell these patterns, but it's very chartable. And Gareth has charted it. I've charted it. It's not hard to chart. It's just human emotion, the same chart.
I was going to say emotion, because people are that fear of missing out and buying in on tops, because that's when it hits the media cycle and that's when people are hearing about it. Exactly. So it's like, it's sad. And the NFTs, one thing I will add, the JPEG bubble, the froth, I agree with. Now, future utility, it can replace the ticketing industry. And also, if scalpers were to resell these NFT tickets, it would also allow for money to, like, a certain distribution of that percentage be sent back to the creator of the NFT. So that way they're at least getting paid on secondhand sales. There's licensing, certificates, registrations, a lot of different things, deeds that NFTs can be utilized for. But what we've seen is definitely kind of an atrocity, in my opinion. But we'll get past that, just like we do with, all excitement with new technologies.
Right. Well, there's always good and bad. There's pros and cons, right? You could love Google because they create such good, amazing products and it's easy for your life. Or you could hate them because they spy on you and they see everything that you're doing. right? So,
Totally.
I mean, it's a pro and con to everything. There's a give and take. That's this world where it's a positive and a negative. But, when I look at, what happened to some of these people in Bitcoin, I don't even feel sorry for them because, that's what trading markets are all about. If you're not seeing these trends or you don't understand these chart patterns, when something goes parabolic, 65, 68,000, yeah, when the time is up and the clock rings and the time is over, it's going to plunge down. And it's still got lower to go. We haven't even seen the bottom of it yet. And then you add in this FTX stuff. I mean, this is something right out of a Tom Clancy novel. You can't even begin. I mean, this one day will be a movie.
Oh, it will be. I think they're already planning it out.
Sure. And they're still writing the script because, this story is far from over. There's so many, right. So, I mean, that's my point. It's not, believe me, I'm probably more of a libertarian than anything else. I love free markets. I'd love to cancel out the middleman, but they're never going to let that happen.
Yeah, well, I mean, ultimately, when enough people realize it won't matter, but we have to get to that point. Now, since you guys have started InTheMoneyStocks, just like a few, maybe year and a half, 2 years after, we got into this quantitative easing, easy money environment that you talked about. And here we are in 2023, where we are tightening. Technically, we're in a deflationary environment. The Federal Reserve is raising interest rates. They're trying to do what they can to get a handle on this inflation that we're experiencing, not only here in the United States, but globally. What do you foresee, just in a broad perspective from your point of view? I guess that would include, traditional markets, obviously. What do you see for 2023? And then we can kind of get into some of the specifics about the stock market itself. I'm pretty sure, based off what you said, that you're looking at precious metals, gold and silver. So I'd like to get your thoughts on those, if that's something that you look into, and then maybe possibly energy and oil. But overall thoughts on 2023 for the environment that we're in, based off your research and knowledge.
Well, if you look at what's happened, we have an inverted yield curve. Everybody knows about that. Even though the 10-year Treasury note yield is what gets the media attention, it's the inverted yield curve between the 2-year note and the 10-year. That's the problem, because banks have to they try to borrow at the low end and sell out lend out at the high end. And they're not going to be good. They're going to lose money. So, the old story goes, what should go is when the banks top out, everything tops out. The banks are getting ready to plunge again. So ultimately, yes, we have a little January rally, but then the markets are going to sink, and they're going to probably fluctuate with these, so-called bounces on hope for, the middle part of the year. And then eventually the central bank will have to cut rates again. I mean, it's the same thing as what happened in December of 2018, when the market went to its first 20% or its last 20% tailspin. This time things are a little bit worse because, as you mentioned, there's quantitative tightening going on. Prior to the recent top out in the markets, the Fed was buying $120 billion worth of mortgage-backed securities in U.S. Treasuries. Now they are selling $95 billion a month worth of mortgage-backed securities in U.S. Treasuries. So they're withdrawing liquidity. The market is simple since 2009, as you know. It's gone up on liquidity. Now they're withdrawing liquidity. How could it really go up? So, again,
they're withdrawing liquidity, but they're also, I'm sorry to interrupt, they're also saying that they're going to, I think I've heard something to the effect of that they will create the liquidity themselves, talking about the Federal Reserve.
Well, if their balance sheet is where they say it is, and we don't really know, it's just hypothetical. It's 9 trillion. Who knows? It could be 20 trillion. We really don't know.
No.
But they are saying they are trying to bring down their balance sheet. So if that's the case, and they're doing the $95 billion a month quantitative tightening, meaning they're selling assets, they're withdrawing liquidity from the system. And when you withdraw liquidity from the system, the stock market eventually goes lower. Now, there's still plenty of liquidity from the massive amount they printed since 2009, but now they are actually withdrawing from the system. That's why the market didn't top out in 2021. It topped out later because now it's starting to affect equities. And, the U.S. has held up very well because Europe is a disaster. European bond market is a mess. They went negative rates, and they don't have a bond market. It's broken, and there's no repairing that. We're on borrowed time before that whole system is bust. And I'm talking the whole European Union will be bust. You give it, 6 to 8 years, it's over. And, anybody in the business, as long as I have, knows this. But, you're not going to hear this on CNBC. You're not going to hear this on Bloomberg, or,
right.
You can't put that there because the whole system is based off of confidence. And when confidence goes away, it all goes away.
Con game.
Pretty much.
Yeah, no, I agree. And I would, people definitely need to wake up and lose confidence, because that's part of the problem, is people still believing this imaginary system is actually real.
That's a perfect word, imaginary.
You said, I'm trying to take note of some of the stuff that you were mentioning. If the Federal Reserve really wanted to fix the problem that they created, because again, we're having faith that the Federal Reserve is going to fix the problem that they created, but if that was their point and they want to reduce inflation, and I'm not like the smartest individual, but I try to learn from smarter individuals, and somebody that I like to watch on a regular basis, I'm not sure if you're familiar with, is Gregory Mannarino.
I don't know.
Okay. You should check him out. But one of the things that he mentioned, and he's mentioned it several times in the past, is the easiest thing that the Federal Reserve could do right now for quantitative tightening to reduce the money supply, to help fix inflation, would to bring back a requirement of reserves for banks.
Well,
because the banks
perhaps
would then be required to hold money, which would pull money out of circulation and back into the banks. Would
right.
that
here's the problem.
Fix some of the problems?
No, here's the problem. So the Fed funds rate, which is the rate that the banks are which is the rate that the Federal Reserve is raising, that's the overnight bank lending rate. Now, that's not like your local savings and loan bank. That's JP Morgan to Deutsche Bank, JP
the repo
Morgan
markets.
That's what's involved in the repo market, right?
Okay.
And if you noticed, I don't know how familiar you are with it, but the repo market went haywire a year ago.
2019. Okay, 2019, the Fed had to come in.
2021, even the Fed had to come in and inject liquidity and constantly, and that's overnight lending. These guys are lending money to each other for 8 hours, and there's problems. So just think about that for a minute. Go look at a chart of Credit Suisse. I wish I had my charts up. But that stock, if you punch it up, the ticker symbol is CS. It's at $3. Go punch up a chart of Deutsche Bank, DB. These are all European financials. This is where the problem lies. This is where the cracks are in the egg. And, if you ever go to the grocery store and you get the egg carton and you try to pull that one egg that's already cracked, and you really try to get it out, you're not going to get it out. It's going to fully crack. Well,
right.
That's the broken egg still in the egg carton right now, and they don't want to remove it. So this is where we are at this stage of the game. And yeah, they could maneuver this stuff for a while, but it's coming to a crescendo. The apex is almost here. We're within, less than 10 years away of this whole entire system going down. And that's why you see this World Economic Forum stuff and all of this other stuff, because they know the whole. I mean, these guys just print money endlessly. Look at these governments, and you can blame it. I'm not a left-right guy. I don't get caught up in that.
Neither am I.
They're all a double-headed snake as far as I'm concerned. And when you look at it, you look at Trump printed, 7 trillion, 6.6 trillion. Biden's at that level now. U.S. debt is at 32 trillion. When is enough? And that's leverage money when you put it into the banking system, because the Federal Reserve fractional banking system is leveraged by 9. So
I thought it leveraged by 10.
Well, 9, 10, whatever. It's 9.
It's still leveraging beyond what they have.
That's right. And again, that's why when they come in and do a QE, quantitative easing, the stock market just takes off like a rocket ship. And
it gets inflated. It's like a balloon that just gets inflated. I just look at it as putting more hot air into the system.
That's right. You're injecting liquidity. It's just like putting nitrous in one of these hot rods. When they hit that button on the Fast and Furious movie and the car goes from 60 to 600, that's exactly what they do. And they can do it for so long, but we've been doing it since 2009. I mean, eventually, you know, you can't do it any longer. And we're getting to that. There goes a debt clock right there, you know?
The writing is definitely on the wall, as you said. And
look at debt to GDP. Look at that.
It's, I mean, this whole thing is just insane. This thing should be pissing. It should be pissing people off.
Yeah, it should. But America's too consumed with football games and, you know,
the circus, the Roman circus theory.
You know,
yeah.
Yeah, exactly.
We're there, man. Now, okay. So the Federal Reserve has said, like, Jerome Powell has come out in a couple of different meetings saying that they're going to remain hawkish. And for people who don't understand, they're going to continue with raising rates. Now, if they continue raising rates, which they've already been technically warned by the IMF, them and other central banks to stop, because especially the Federal Reserve, because it's causing a ripple effect, because everything is judged on a forex market by the US dollar, because it's the world reserve currency. But you're saying eventually the central bank, meaning the Federal Reserve as well, will have to cut rates and reverse course.
If they want to keep this show going, that's what they're going to have to do. Or else what they're going to have to do is just say, hey, it's unsustainable. System's collapsing on itself. And if certain parts of this economy break, and it will start with Europe, mark my words there, it will start with Europe. When that starts to tumble, then they're going to come in and say, we're going to go to CBDC and we're going to give you XYZ on your actual money. That's what's going to happen.
I'm glad that you said that, because does the from an economic perspective, does the CBDC give the central banks a better way to control and manipulate what we see as inflation?
Well, I'll say this.
And they keep the game and kind of keep the game rolling a little bit longer.
Once people are in power, they never get out of power, right? So there's going to be, that's going to be the new structure system, in my opinion. And you see it already happening in China. China already has their digital currency. They even put like a time parameter on it when you can actually use your money. So, you know, this stuff is already out there, right? They already have it available. They already know what they're doing. But I think they are trying to make an effort, at least they're showing it, that they're trying to keep this whole thing intact and keep, you know, fear from creeping in. But when fear creeps in, there's nothing that can stop the system from crumbling.
No, I agree. I mean, there's been so many things happening. I mean, look what happened with the British pound and the UK, that losing value. And I think that's directly related to a lot of the interest rates raised by the Federal Reserve, which creates a lot of enemies in a way. And they're supposed to be our ally nations as well. So it's a very interesting situation. Obviously, if we see the central banks reverse course, then the stock markets will get another hot air injection, and we should see some more upward action.
Yeah. So, you know, we get into 2024, 2025. You got to think that's what's going to happen. They're going to cut. They might even do it later this year. I wouldn't rule anything out, you know, if things get so bad. And, you know, if you look at why inflation even happened, it's because there's just too much money printed. And then you had COVID go down with these ridiculous lockdowns, and they're ridiculous. The world shutting down and no products coming abroad, semiconductor shortage. I mean, this is all
stopping commerce. Stopping commerce wasn't good.
Ridiculous. It's ridiculous. And when that happens, you get shortages of things. That creates inflation too, and it amplifies it. So, you know, otherwise we'd be in deflation, which I don't think there was anything wrong with deflation. Cheap prices for everything. Who cares?
Yeah, well, okay. So with what we were saying about the Federal Reserve, like, do you have a time period that you're expecting that they're going to be reversing course?
I would have to think, you know, would probably see something by next year. I would think that that's a fair possibility. Overall, if they don't do something by next year, you know, we'll have to wait and see where this market is. But just the fact that they're doing a quantitative tightening of 95 trillion. Yeah. So maybe they don't raise interest rates, but if they're selling assets, that just takes liquidity out of the system. And this whole system is built on liquidity.
And based on debt and liquidity.
And anytime you're in this kind of a banking system, it's always about debt, right? So today there was a 3-year bond auction, 3-year treasury note, and the auction was stellar, right? So they tell us. But all they do is just keep rolling more paper out, right? Just more debt, more debt, more debt every month. 3-year, 7-year, 10-year, 30-year, 20-year, back to 2-year, 3, the same game. Just keep rolling out more paper, putting that debt clock. Just look how fast that debt clock spins. Just look at
it doesn't stop.
It doesn't stop, and
it just continues. It's like a 24/7 moving mechanism.
Billions a day in interest, and now they're raising taxes, right? The Biden administration is going to raise taxes this year, and that just makes things worse. So I know people are very excited about January, and I'm long some stocks right now for this bounce, but it won't last all that long.
It's almost a delayed Santa Claus rally.
Exactly. That's exactly what it is.
We really didn't get the Santa Claus rally like we would normally get.
Yeah, and all you hear on the TV is how great things are going to be now. I mean, it's almost comical. But, again, that's why I have to use charts, because I could never take any advice. I have to just look at the price pattern and time.
When do you see reality coming back to the stock markets? Like, do you see in weeks. February, March, do you start seeing us decline?
Yeah, we're probably within weeks to a month away. I mean, that's all. It won't be very long.
Okay. What are your thoughts on gold and silver and precious metals in general for this year?
I like precious metals. In fact, another good call I had was I bought the silver bottom. I gave it to all my members, all my subscribers, and we bought physical silver as well as the silver ETFs. And we really nailed a lot of the silver trades. In fact, if you go to Bullseye Options, you'll see all the silver plays that we had. But silver's had a great run. It's gone from 17.5, 1740, all the way up to 24. Now it needs to pull back. Gold has had a great move to 1875. Now that needs to pull back. So again, if you just look and you look at precious metals, wait for a correction in silver, be a buyer of silver. Ultimately, when gold gets down to around the 1500 handle, back to 1550, I would be all in on gold. Now, it's not going to save you forever, but it's going to save you for a while.
When you see the central banks reversing course, do you see gold and silver taking another hit?
When I think the central banks, you're talking about when the central banks cut rates.
Right.
Yeah, no. I think that time will be when gold and silver just go to the moon. They just skyrocket from there. You'll see gold probably make a new high. Silver could challenge its old high at $50 or maybe more. Right now, the pattern suggests silver is going above 30. So again, I think gold and silver are going to be good. Gold will be a little bit affected by the strong dollar. The dollar still hasn't weakened enough. The dollar's still got another move in it. In other words, the dollar's still going to make another move higher, and that probably coincides with the stock market declining. Then ultimately, when the central banks do finally cut and try to devalue the dollar, that's when precious metals will just take off, and you might even see crypto take off again at that point too. I wouldn't rule that out, but gold is held up very, very well. But silver is really where you want to be at this stage of the game. Eventually, gold will overtake it, but gold's day, it's had a good move recently, but it's not, this day in the sun is not yet.
Well, the gold silver ratio is pretty off. I think last I looked, it was like 76-1.
It's been out of whack for a long time.
What is it traditionally supposed to be, like 30 or 40-1?
60-1 traditionally.
60-1. Okay.
Yeah, 60-1 is the historical average. But if you look at silver now, it's got so much industrial properties to it now. It's in everything.
Right.
It's in the microphones. It's in cell phones. It's in every car, every semiconductor. It's in just about everything. So I really love silver. I picked it up on August 31st. I actually bought bullion on September 1st. And I would do it again on a little bit of a pullback or correction. And it's been a great trade. And silver miners too. When they pull back, get involved in those. Gold miners get involved in those. They all got a lot more upside from here for years to come.
Now, obviously, if you're trading silver, you're dealing with just like the paper derivative of it. Do you actually own physical gold and silver and things to that effect?
Oh yeah, I own bars. I could build a stoop with how much of this stuff I own.
I just have to
You know,
distinguish the difference between the two, because if somebody just owns a bunch of gold and silver, but it's all on paper, you don't technically own that gold and silver.
that's correct. You know, you're just trading it for cash, and you know that's what I do as well, because we still live in a cash society where the dollar is still the king. But I've been buying more junk silver and silver coins, just simply for the fact that if we ever, God forbid, have to go to the bartering system, you know, that's what you're going to need going forward if this system ever collapses. And I know a lot of people don't think like that. I may sound like an absolute lunatic, but I'll tell you why. I do a lot of business with people from Venezuela, and you know what got those people out of there was their silver holdings and their gold holdings. So you know that's what they were able to do to get into this country. And you know, they're firm believers, and I've always been a believer in precious metals, just because it's been the currency of time since the beginning of the Bible, and I still feel that way.
They've proven themselves as being safe haven assets, holding up. If you're looking to maintain your purchasing power of your savings, your wealth, things like gold and silver and precious metals have proven themselves throughout time to be that anchor, that lifeboat for people. So I'll take a moment here to shill my partnership with Money Metals Exchange, because people can actually get a free ½ ounce of silver if they're a first-time buyer. So all they have to do is go to moneymetals.com, purchase a minimum of $100 worth of products, and use the promo code RICETVX at checkout, and you get a free ½ ounce of silver, and it supports my channel. And the cool thing is, I mean, they're selling fractional silver, like 10th ounces, quarter ounces, ½ ounces. They have junk silver, which would include Mercury dimes, Morgan's silver dollars, the 40% silver $half, also like the nickels and dimes and stuff that had a certain percentage of silver. So I always encourage people to take advantage of these opportunities to get some free precious metals. I had to take an opportunity to shill that, because again, I just think, you know,
I love that.
I've been trying my best to encourage people to diversify. I am a crypto person, but I am also a big on precious metals as well.
Yeah, so I mean, everybody should have some. You know what? It's just an insurance policy, a safe haven. You know, because the thing about crypto too that I've always concerned myself with: what happens one day if this grid goes down? You know, what happens if the internet is off?
Right.
Like, you know, what's to say we can't have a Mad Max scenario?
Well, if you've been at a business while the power went out and you were going to go, you realize you can't pay unless you're paying with cash, because they can't do any sort of transaction electronically without the internet or electricity. So I'm on the same page. I'm not what you would call a prepper, but I'm somebody who is prepared for hard times. And I know that there's going to be a point where you're going to need to have bartering items, which silver, gold, things like that are good. But for people who can't even afford that, you have things like toilet paper, alcohol, medicines. There's all sorts of different things that we can all accumulate to use to barter.
Exactly. And, you know, another thing just to go back is that if something like that were to ever happen, you know, we probably are never fully prepared anyway, right? Like whether a prepper or not, we're never really fully prepared. But the way I look at it is, people out there need to have some kind of small insurance policy. And you know what? Even if it's a bag of pre-1965 silver coins, you know, you could get that fairly cheap and just have something. You know, we might have a war that pops up. I mean, look at what's going on with Russia and Ukraine, the way the U.S. and NATO always keep, you know, pushing this thing along. There doesn't seem to be any peace. God forbid there's, you know, some kind of, you know, of a world escalation that takes place. People have to prepare. This is an upside down world. This stuff can happen.
Look at the division just in the United States alone. That could turn into something completely different, and that would even be another game changer. So we have so many different things all around the world that are kind of like, a piece of straw that has the capability of breaking a camel's back, and it's just trying to figure out which straw it's going to be, because it's shit stacked upon shit stacked upon shit, and then it gets to be a big huge stack of shit that's about to tumble over, and everybody's about to get shitty, and it kind of is in that situation.
It's a great analogy.
Unfortunately. Okay, the last thing I want to ask you, as far as questions, and then we'll get into kind of what you're doing over in the money stocks, is just on a short-term basis from the Federal Reserve perspective, what are you expecting from the next FOMC meeting early February? A lot of people are pricing in 25 basis points. Are you on that same page? And then thinking a little bit ahead, where do you see the Fed just over the next few months with the rates, interest rates?
I think they're going to go ahead and just do a 25 to 50. They might do 50. I wouldn't rule out 50, because they want to get a little bit ahead of the 2-year Treasury note yield, which is currently at around 4.25. That's matching up with the Fed funds rate, but they got to give themselves a little bit more leeway. So they got to get above that 2-year Treasury note yield. Now, here's a big problem. If that 2-year yield starts to move again to the upside, they're behind the curve. So that's a real pickle for them, because that hurts the banks. And again, everything in a debt society is predicated on the banking system. So what I think they're going to do is go a quarter, go maybe 50 bips, and they'll probably say we'll be data dependent, or they may even try to sound a little bit tough. But I don't think it's going to matter much. I think there's so much damage done out here. The market's got to wash itself out. It's got to clear out some excesses before they can really, get this thing, inflated again. And that's kind of what we've been seeing for, since 2009. You can make a case even since the 2000 top. I mean, I was around for that.
The dot-com bubble, you mean?
That's right. Yes, exactly. I remember in the 90s, 97 and 98, we had the Asian contagion and the long-term capital crisis, which was the collapse of the Russian ruble. These MIT guys thought they were smarter than the world, and the Fed had to bail them out. And the only bank that didn't help was Bear Stearns. And look who went under during the 2007 crisis, right? Bear Stearns wasn't bailed out. So, all of this stuff comes around and goes around, and it's going to be an interesting, next 8 to 10 years.
Yeah, that's kind of an understatement, but I agree. I 100% agree. All right, man. I definitely enjoyed the conversation, and I look forward to being able to do more. And hopefully next time we could do some chart sharing, because I would love to get your perspective, like look at things. I really like looking at stuff.
Yeah, we could do that. I definitely will have it all ready to go, man. And again, nothing better than seeing a footprint of human nature, because that's what the charts are.
Yeah, no, I agree. So let's take a moment here before we wrap things up. And one of the things that I noticed if people go to your Twitter account, which they can follow, I have the InTheMoneyStocks pulled up, but right now you can go to @Nick Santiago 01, follow him, and these will be linked down below. Everything that I'm screen sharing will be linked down below in the video description. You'll also see a link for this shorter.buy website, which has the bullseye option alerts, bullseye trading, and then day trade with the best traders in the world live, in addition to the stock market trading action blog from InTheMoneyStocks and different social media links. What can you kind of give us a little bit more information about what the bullseye trading alerts and bullseye option alerts are all about?
Yeah, so bullseye trading is basically I'll give you guys my swing trades in there. We also work on Gann timing models where we cover a variety of different markets. I'll cover the S&P 500 and all the major indexes, as well as oil, gold, silver. We'll cover the 10-year Treasury note yield and different yields out there. We'll also cover the European markets, the Asian markets. So, I have a lot of members from all over the world come into that. And then if you're looking at bullseye options, it's basically a little bit more of a riskier swing trade. And that I just basically buy calls and puts. There's no strategies or straddles. It's very, very simple. Anybody can do it. You're buying either a call option or you're buying a put option on a particular equity, and pretty much knocked the cover off the ball this past year. I think I lost the feed.
Oh, I didn't realize I didn't realize I had myself muted. I completely apologize about that. What I was asking was, and I was pulling it up. You guys are showing records of your trades.
Yeah. So that's just Let me see. There we go. There you go. Yeah, you can see everything that we do. It's fully transparent. And
you took December off. I'm taking it.
No, December was a little bit on the quieter side. But again, I had a nice trade already, and that just triggered in Tyson Foods for that. But in the bear markets, you don't trade every single minute. You trade only when the setups appear. So for me, like I said, I'm always very, very math specific. And when I get into equities, it's going to be when they tell me to get in. I can't force my will on the market. I just go in there when the market tells me I should be in there.
I mean, I like that strategy. And I mean, if you were to look at everything, it looks like that there's obviously more green than red. So it looks like there's more positive action than negative action. And that's always a good thing, or I wouldn't think you'd be able to offer this service. So
yeah. Hey, listen, it's a humbling business there. When you have options, there are going to be times when you're going to lose your premium, but that's why you do it, because you're going to risk a little bit more. It's a little bit risky, but I can honestly say I bet about 80%. And it's not the easiest thing to do, but if you follow the rules and you learn what you're doing, anybody could do it. We teach it. I teach it all the time to members. I teach it all the time to people that come over. We just taught a big class in Clearwater Beach, Florida, where we had traders come from all over the world. And, we taught them exactly what to look for. And most of those traders, the courses pay for themselves. So, you don't even want to follow me. Just learn how to do it, and you can do it on your own.
Well, man, I appreciate that. I appreciate you sharing all that information and explaining all that. And like I said, I really thoroughly enjoyed the conversation. Everything that we had screen shared and talked about today will be linked in the video description. Before we wrap up, do you have any final thoughts? Anything that you would like to add?
Yeah, I'd just like to say that, if you're trading these markets and you're just trading on fundamentals, learn about the charts. At least do yourself a little favor. Learn what price action is all about, what the charts are telling you, to try to navigate through. And I know so many people. I know these guys on TV. I know them all. And not many of them had a good year in 2022. So, when you look at hedge fund performance out there, you look at how people did, learn the charts. You can listen to all the stories in the world. Don't even believe me. Just learn what the charts tell you, and you'll be fine in these markets.
Well said. Take time and educate yourself, because you are your most valuable asset aside from your time, in my opinion. And I just thought I'd share that. So if you could bear with me 1 second, Nick, just going to do the wrap up and stop recording. Ladies and gentlemen, thank you again for watching all the way to the very end of the video. If you haven't, make sure you take time to smash that like button. It helps other people to find these videos in the YouTube algorithm flow, and it helps bring attention to Rice TVX. Make sure you're subscribed, not only here at Rice TVX, but also my new sister channel, Rice Against the Grain. And I will leave you with this. I encourage you, be a blessing to others, treat people how you want to be treated, be the glitch you want to see in the matrix, be the change that you want to see in this world. And until next time, practice change.